Hello friends, welcome to the monastery where mindful trading meets order flows. Welcome back to Mind Monastery. In yesterday's analysis, we observed that the market was approaching a major resistance zone around 24,550 while building value near 24,290. Today's session revealed how the auction responded to that resistance. And if you haven't watched yesterday's analysis yet, I recommend checking that video as well, because today's market movement is actually a continuation of the levels we discussed there. Now let's decode today's price action using volume profile and auction market theory. Yesterday, the market built value around the 24,219 to 24,300 region, which became the point of control for the session. At the same time, we identified the 24,550 resistance zone as a critical level. The key question was simple: would the market accept prices above resistance or reject them? When today's session began, the market initially attempted to trade near the upper value area from the previous session. But very quickly, we saw selling pressure entering the market. Instead of building value above the previous range, the market started rejecting those higher prices. The most important event of today's session was the breakdown below the previous value area low. Once price moved below that level, the market effectively signaled that yesterday's fair value was no longer acceptable. In auction market theory, this is called value migration. And today, the migration clearly shifted to the downside. When we examine the intraday volume profile, we can see that a new point of control developed around the 24,080 region. This means the market started accepting lower prices at the new fair value. Once that acceptance occurred, the market continued its downward rotation throughout the session. As the day progressed, the market formed a series of lower highs and lower lows. This is the opposite of the structure we observed yesterday. Instead of buyers absorbing pullbacks, we now saw sellers dominating the auction. This behavior typically indicates distribution rather than accumulation. Towards the end of the session, price moved closer to 23,870 support area, which has been an important demand zone from earlier sessions. This level will now become a critical reference point for the next trading session. Based on today's volume profile and market structure, there are important levels to watch going forward. Support levels: 23,870 major support zone, 23,750 region, which is a possible downside extension if support breaks. Resistance levels: 24,080, which is today's point of control, and 24,290, which is previous session's value area. If the market reclaims 24,080 and holds above it, we may see a rotation back towards 24,290. But if prices breaks below 23,870, the downside auction could accelerate further. So the theory of the market is quite clear. Yesterday we were observing a market testing resistance. Today that test resulted in rejection and value shifting lower. The next session will reveal whether the market finds support near 23,870 or continues the downward auction. If you found this analysis useful, subscribe to Mind Monastery, because every day we decode markets using volume profile, smart money concepts, and auction market theory. Because the goal here is not prediction, the goal is understanding how the market moves. Thank you.